In this session, we will be focusing on the cash flow statement. We had already discussed what is meant by fund, what is meant by cash, and what is the difference between the two. We saw that fund refers to the resources that is available with you that can be converted into cash should there be a need for the business or the organization tomorrow. When we talk about cash, when we mention the item cash, please remember we are talking about the actual measure of cash, physical cash that is readily available with you in the business. Okay, we are talking about the cash that is readily available with you in the business. So that is what is meant by cash flow statement. Now, moving on, let's talk about a little bit more of cash. What is cash? Now, we all have heard about a lot of discussions about cash, and what we know is that cash plays a very important role when it comes to any business. So any business, if they have to survive, if they have to function smoothly, what is needed for them is that they would be needing cash. Okay, they would be needing cash. So cash is what they would be needing in order to function effectively, in order to function smoothly. Okay, so without cash, any business will not be able to function properly. Okay, so that is what is meant by cash. Now, talking a little bit more about cash flow statement. Cash flow statement is one such technique, or it's one such tool which is used by businesses so that they would be able to manage their cash requirements better. So cash flow statement will give them an understanding how much of cash is available with the business, how much of cash has been utilized for the various activities of the business, and how much of cash is available at the business's disposal. When we had learned budgeting, when we spoke about budgetary control, we spoke about a similar technique. We spoke about a similar tool, which was called as the cash budget. Now, why is the cash budget prepared? Cash budget is prepared in order to ensure that your business has got sufficient amount of cash that is available at its disposal. Okay, so it has got sufficient amount of cash, and sufficient amount of cash is available at its disposal. Okay, so that is what is meant by cash flow, cash budget. So cash budget is one of those techniques, or is one of those tools which will help the business to plan. Here we are talking about cash flow statement, and when we talk about cash flow statement, we are talking about one such a statement which will help the business to plan their cash in a better way. Now, what are the kinds of cash components which are considered when you go in for cash flow? Cash flow when you go in for cash flow statement. Okay, so here one important thing that you have to remember is, when it comes to any business, there are two important aspects which are considered. One is what is meant by cash, and what is meant by cash equivalents. So both are equally important. Okay, both are equally important. So when we talk about cash, we also have to consider equivalence of cash. Now, what is meant by equivalence of cash? Now, what will happen is, in your business, you have you have cash, you have cash in hand, cash at bank, etc. Okay, so what is meant by this? So this will help you to ensure that that whatever cash that is available, it is available with you at your disposal. So when you talk about cash at bank, what are you talking about? When we talk about cash at bank, it is the cash that is available with you in the business, and should there be a requirement, you can withdraw always from the cash. So unlike fund, here it is cash, but what has happened is you stored that form of cash in an alternate way. It is very difficult for you to handle physically, huge volumes of cash. So instead of handling those cash in your, what you're doing is that you're storing the cash in the form of, cash into your cash flow statement, and you're storing it over there, so that should there be a need, you will go about utilizing it. Okay, so that is what is meant by cash flow. That is what is meant by cash equivalents. Okay, so cash in hand, cash at bank, etc. All these are equivalents of cash. Okay, all these are equivalents of cash. So whenever we talk about cash flow statement, what you have to remember is these are the items that will be considered. The items that will be considered are your cash, and then equivalents of cash. And equivalents of cash would be your cash at bank, cash at hand, in hand, etc. Okay, so these are the aspects which would be considered when you take this into picture. Okay, now let's move on from here. Let's talk about the next top point. Now, a cash equivalent would always consist of your bank overdraft, cash credit, short-term deposits. All these together will be is what you will be together be referring to as cash equivalents of cash. Now, why do we prepare cash flow statement? Cash flow statement is prepared in order to understand where is the cash coming from, how exactly is the cash being utilized. Okay, so you'll be carrying out a number of activities where you will be generating cash. You may have sold some machinery. You may have requested your customer to make a payment. Excuse me. You may have mobilized some amount of cash from the bank in the form of loan. So all these collectively together are called as cash and cash. So you're trying to understand where all are these items utilized. Next, what we are talking about is where are these cash being spent? Okay, where exactly are these cash being spent? So cash is being spent. You could be spending it to buy raw material. You could be spending it for your staff. You could be spending it to buy new property. You could be spending it to buy new machinery. So these are the areas, these are the domains into which you would be utilizing the cash. Now, moving on. Let's talk about cash flow statement a little bit more. Now, cash flow statement, what happens over here is it is a summary. Okay? It is a summary, and it is prepared for a specific period of time. So usually cash flow statement is usually prepared for 1 year. Okay? So cash flow would be prepared usually for 1 year. So at the end of the financial year, when you end up preparing your cash flow statement, it will help you to understand what were your cash receipts, how exactly were these cash utilized. So when you prepare your balance sheet, please remember balance sheet is only an indicator of how much your assets are, how much your liabilities are. Okay, so one such asset that is declared in your balance sheet is your cash in hand, cash at bank, etc. But from the balance sheet, you will not be able to understand what are the areas for which you have spent cash for. So you may have spent cash to buy raw material. You may have spent cash to purchase new machinery. You may have issued new shares. You may have got some cash. You may have gone to a bank, taken a loan. So all this is not, you do not get a wholesome picture from the cash flow, from the balance sheet. So for this, in order for you to have an understanding, you must prepare the cash flow statement. Next thing is, when you prepare the fund flow statement, what happens in the fund flow statement is that fund flow statement will help you to understand fund flow statement will help you to understand what are the resources that is available to you in the form of fund. So remember what is meant by fund. Fund refers to the resources that are available that you can convert into cash should there be a need. Okay, if there is a need, what is it that you can possibly do in order to convert that into cash? Next, moving on, it also explains the reasons for changes in cash position of the firm. So when you take the cash flow statement, it will help you to understand what are the areas in which cash has come in, what are the areas into which the cash has been spent. So it will help you to understand what is the exact cash position of your firm. Moving on, we will also help you understand what are the transactions that you have carried out which has resulted in creation of cash or which has mobilized cash, and what are the transactions where cash had to be spent out. Okay, cash had to be thrown out. So these are the two areas into which you would be needing cash flow statement. Okay, so for you to help you to understand all this. That is the reason why you would be preparing cash flow statement. Now, what are the uses of cash flow statement? Cash flow statement will help you to understand the current cash position. How much of cash is available with you in the business? What is the cash that you have, and where all can this cash be mobilized? That is where cash flow statement comes into picture. Then it will help you to understand short-term financial planning. You may have to carry out some kind of plans, you may have to carry out some kind of evaluation to see how much of cash is available. So there are some decisions that you can take accordingly. So for example, you have decided to set up a new plant. To set up the new plant, you will definitely be needing cash. You will be needing cash to buy the land. You may be needing cash to set up the building. You may needing cash to establish the machinery, get staff, buy raw material. All these are involved. So to make sure that all these pictures, all these aspects are taken care, you will have to, have cash flow statement. Next is it will help you to compare your statement with the forecast. So remember, simultaneously, the first activity that the management would be carrying out is that they would be preparing a cash budget. We already know how to prepare a cash budget. When we prepare the cash budget, what happens is a cash budget will help us to understand how much of cash is available with us at our disposal, how much of cash can be spent, how much of cash can be utilized. So this is available with us at our disposal. And when you compare your cash budget with cash flow statement, it will help you to, so you have the plan in hand, and then your cash flow statement will help you to understand, have you gone with a utilization? So remember, as a part of your budgetary control, you have to do a comparison between the forecast and the actuals. So your cash flow statement is a part of the actual. It will help you to understand where exactly are your cash, how exactly has been utilized. So the use of fund flow statement and cash flow statement, the use of cash budget and cash flow statement, these two should go hand in hand. Okay, these two should go hand in hand, and that is how the utilization will turn out to be effective. Then when you prepare your cash flow statement, it will help you to plan and control. Both are there. So all these statement preparations are going in tandem. At first, you're preparing the cash budget. Once the cash budget has been prepared, then you will be preparing the once the cash budget is prepared, and then at the end of the duration, what will happen is you will go about with the preparation of the cash flow statement. And once cash flow statement is being prepared, then what happens is that you will come to understand where exactly has the money been utilized. Okay, so that is how this gets utilized. Now, why would you need cash flow statement? Cash flow statement will help you to understand: are you in a position to take good decisions? Okay, so what happens over here is that it will help you to frame policies for your firm. Now, why are you framing policies for your firm? You're framing policies for the firm. The reason being is because you will be able to utilize your cash effectively. Okay, so it will help you to utilize the effectively. Now, if you do not have a clear-cut understanding where exactly are your money being utilized, where exactly your money is being spent, it becomes very difficult for you to go about now, for example, some businesses, they have a policy of declaring bonuses for their employees. Now, that's a policy. Now, why were they in a position to frame that policy? They were in a position to frame that policy is because they frame that policy is because they have seen Okay, so in the past, they have seen that, this is how the money is being utilized, this is how the money has been spent, and this is how this is how the money has been. So what happens is that this is how exactly it has been framed. So for that, you need some past experience. You must be able to evaluate and see what were your activities, where exactly has these money all been utilized, and all that is how you will go about framing your policies. Now, what we will be doing is we will be trying to understand how is cash flow different from fund flow. Okay, how is cash flow different from fund? Here we will be discussing how is cash flow different from fund flow, and let's have a discussion of the differences. So the first difference, let's start off with the meaning. What is meant by cash flow? What is meant by fund flow? So cash flow statement is a statement which talks about the inflow and the outflow of cash. Okay, so how much of cash is coming into the business, how much of cash is going out from the business. Fund flow talks about the changes in the financial position of a firm. Okay, what are the changes which are taking place in the firm? Now, why do we prepare fund flow statement? Why do we prepare cash flow statement? The reason why we prepare cash flow statement is that for the period of our preparation, we want to try and understand where all has the cash been utilized. Okay, where all has the cash been utilized, where all has the cash been spent. Fund flow statement, what happens is it talks about the changes. It talks about what are the kind of changes which have taken place in the statement. Okay, so it talks about where all has the money been utilized. Then when you prepare cash flow statement, you actually take the cash basis. So which means you're talking about the actual settlement of cash, whereas fund is based on accrual. So how is accrual different from cash basis? See, cash basis, we are talking about real-time settlement. Okay, we are talking about real-time settlement. How much of cash have you got right now? How much of cash have you paid off? When you talk about accrual, here we are talking about how much of cash we are likely to give, how much of cash we are likely to get. Okay, so we are not talking about what is the actual exchange of cash. Next is when it comes to cash flow, it's a short-term analysis. Because the intention with which you will be preparing the cash flow is you want to understand how much of cash is variant, because cash position in your firm, it can keep varying every day. But fund position is not like that. The only difference that in fund position for a certain period of time, it could remain the same. Okay, it would not change. Okay, it would not change. Now, when you talk about the opening and the closing balances, when you take your cash flow, here you're considering your opening cash level, closing cash level. When you talk about fund, here we are talking about opening fund levels, closing fund levels. Then is your cash position a part of your financial statement? Yes, it is. How about fund? No, fund is not a fund position. It is an extension. Okay? So these are the differences between fund flow and cash flow statement. We will be discussing now regarding the preparation of the cash flow statement. There are two methods by which we can go about with the preparation of cash flow statement. And in this discussion, we will be focusing on the AS3 format. Now, the AS3 format of cash flow statement, it has got three parts. First part is cash from operating activities. How much of cash is your business generating from its actual operational activities? So here, we are talking about how much is the measure of the cash that your business was able to generate as a result of its revenue. So the business is carrying out activities, they are manufacturing, they are producing, and as a result of this, how much of money has the business actually generated? Okay, how much of money has the business actually generated? So that is what is meant by this. So here, what happens over here is that you are talking about what is the how much of cash you are generating as a result of your operational activity. Next section is you're talking about cash from investing activities. So here you're dealing with the discussion on the preparation of the transaction with assets. Okay, so here what happens is that you will be talking about how much of how much of assets have you procured, how much of assets have you disposed. As a result of this, how much have you gone about with, how much of money is available with you at your disposal. So that's what happens over here. Then next thing is that next section is you'll be talking about financing activity. So here you're talking about what are the changes that has been brought about in your business's financial activities. So whatever money, whatever transaction that has made or that has brought about changes in the capital structure. So there may be some transactions where you would be issuing shares. There will be some transactions where you will be selling of shares. You would be taking loan. You will be paying off your loan. So all these transactions would be considered as a part of this section. Okay, so all this would be considered as a part of this section. So this is what happens as a part of your financing activities. Okay, then remember the format that we would be learning as a part of for cash flow statement is what is called as the AS3 format. So this is a standard format which is prescribed by the Institute of Chartered Accountants of India, and then we will be preparing the statement according to what they have given to us. Okay, so based on what they have given to us, based on that we will be going about with the preparation of the cash flow statement. Okay, so with that, we have come to the end of the discussion of the cash flow statement. We will also have to discuss the format. What we have here is the format of the cash flow statement as per AS3, and there are three important sections as we had discussed earlier: cash from operating activities, cash from investing activities, cash from financing activities. So each of these sections are individually calculated, and when you add them up all together, you would be getting, you'll be able to understand, is there an increase or decrease in the cash? You'll be able to understand if there is an increase or decrease in the cash. Now, this increase or decrease, when you sum up that with the cash and cash equivalent at the beginning, it must be equal to the cash and cash equivalent at the end. Okay, so when you add up these two together, it must be equal to cash and cash equivalent at the end. So this is how we go about with the preparation of the cash flow statement as per the AS3 format. So with that, we have come to the end of the discussion of the format of cash flow statement.